Eigenlayer with the Eigen token is now close to an all-time high. What's behind all of this? Let's have a look at the on-chain metrics. Let's have a look at the usage of this restaking protocol. Let's look behind all of the buyers and sellers, and let's try to figure out whether or not this rally can last longer. So here we are at $5.53. We more than doubled in the last month. And Eigenlayer is a solution to a problem that Ethereum has created itself. Now, Ethereum moved from proof of work to proof of stake. And so now, in order to secure the blockchain, one has to stake Ethereum. And the number of staked Ethereum on-chain tended to trend upwards for a very long time. Now it's going sideways in the last few weeks. But here's the problem. When we stake Ethereum natively, it's not available anymore, right? This is bound capital. We can't do anything anymore. Eigenlayer solves this by introducing a restaking mechanism. So you deposit your Ethereum to Eigenlayer. Eigenlayer then forwards this to the native Ethereum staking protocol. And at the same time, you can withdraw Eigenlayer staked tokens. Those restaking tokens are then again available capital. So we've got the best of both worlds. We are securing the blockchain, but at the same time, we keep our capital available. Now, since the move from proof of work to proof of stake, Ethereum did not have a very good time. What we see over here marked as this arrow is that exact transition. This is Ethereum relative to Bitcoin, and it underperformed Bitcoin by 55% in the last 2 years. Fundamentally, the tokenomics improved with the move from proof of work to proof of stake, as in there's less new supply hitting the market. So this is the ETH supply over time since the move from proof of work to proof of stake. And had we not done the transition, then the supply would have been way larger. So it's surprising how the additional supply that hits the market for Ethereum went to pretty much zero with the transition. But at the same time, the price wasn't able to outperform Bitcoin. But let's go back to Eigenlayer. Eigenlayer is an absolute juggernaut within Ethereum. Have a look at DeFi Llama. This is the total value locked for different protocols. Lido is also a staking protocol. It's got a total value locked of 39 billion. Eigenlayer has 18 billion, just below the borrowing and lending protocol Aave. We've also talked about Aave just recently on this channel. Feel free to check out that video. But yeah, over time we see initial adoption, then a drop, then a recovery. But that's a total value locked measured in US dollars. In Ethereum, we actually see way less volatility. Again, we see our initial adoption, but since April of this year, we are somewhat flat. In other words, all of the total value locked volatility just comes from the price volatility of Ethereum, not from the usage of the protocol. Eigenlayer seems to be somewhat matured now. It doesn't grow, it doesn't shrink much. And so here are a few statistics around the liquid restaking tokens. It peaked at the beginning of June of this year. That's measured in US dollars, then went down quite a bit. But again, measured in Ethereum, things have stabilized. We can also have a look at how much trading activity happens with those LRT tokens. Again, that peaked at the beginning of June of this year, but seems to not shrink anymore. Here we've got a breakup of total value locked of Eigenlayer versus two competitors. We've also got Symbiotic and Karak over here. Eigenlayer still dominates the market, but both Symbiotic and Karak seem to be growing quite consistently and take away market share. Now, the further we go down the rabbit hole of altcoins, the more risk we take, the more reward we should also expect, right? When we don't buy Bitcoin, but we buy Ethereum instead, we should get more return. When we don't buy Ethereum, but we buy the Eigen protocol, then we should also get more return compared to Ethereum. Now, in the past, that has not necessarily been the case though. So the additional risk that we take on by buying Eigen over Ethereum did not get compensated. It was not a good bet to buy Eigen. Eigen underperformed Ethereum by 54% initially. Then since November of this year, we see a recovery. And so since the beginning of October of this year to today, we've seen a slight underperformance versus ETH of 13%. Now with DeFi protocols, it's always very hard to pinpoint where the exact risk is, right? We had the Terra Luna ecosystem that completely went bust from one day to the next. That was also the cause for the bear market in 2022. So this is now Bitcoin. But besides that inherent risk, that tail risk, we also have the supply expansion. The more the supply expands, the more the demand has to expand as well for the price to keep up. Now what we've got over here is the Eigen supply over time, and this tends to increase. This blue area over here is community initiatives. And the big question is, how quickly will all of those other tokens get released? So more community initiatives, airdrops to stakers, and cash outs by the development team. Let's have a look at the on-chain metrics. Let's have a look at those more than 200,000 holders of EIGEN on-chain. So there are currently 227,765 holders that hold the token, but not all of those holders are created equal. Now what you see on the left side is the number of holders that have at least 1,000 EIGEN tokens. So at the current price, that's roughly $5,000 worth of the token. For the chart in the middle, we go at 10x in minimum holding, so that's now $50,000. On the right, another 10x, that's now $500,000 worth of the token. We can see quite a lot of volatility by those smaller holders. So parts of this is usage of the EIGEN token in other protocols such as liquidity pools. Parts of this might also be transfers to centralized exchanges. But it seems like the very largest holders, they tend to simply just store. So if you've got $500,000 of EIGEN or more, you're not really deploying this anywhere else. You simply just do self-custody. Now the price discovery does not necessarily only happen through buyers and sellers on chain anymore. Most of the price discovery now happens in the black boxes in the centralized exchanges. Have a look at this. 23% of trading volume happened on Binance, another 9% on Whitebit, another 6% on XT.com. Now Whitebit and XT.com are also white labeled versions of Binance. So more than 1/3 of the entire trading volume happens on those centralized exchanges, and we can't even see Uniswap over here. On top of that, we've also got the derivatives market, so the Binance futures. They have now more than 400 million worth of trading volume of EIGEN in the last 24 hours alone. Meanwhile, the trading volume on-chain was only 14 million in the last 24 hours. In the largest of the liquidity pools, that is only 10 million worth of EIGEN. Half of this, by the way, is wrapped Ethereum. The other half is EIGEN. Now things are hyper bullish right now, right? Bitcoin continues to make one high after the next, and pretty much every altcoin is appreciating right now. It almost feels like because there's so much correlation within crypto that it doesn't really matter what we buy. What we see over here is the others dominance. So how much of all of crypto is in the altcoins that's not in the top 10 in terms of market cap. And that's growing very nicely, very steadily in the last days. And I see this in the statistics of this crypto channel as well. Nobody was interested in crypto just a few weeks ago, and suddenly we're spiking up in terms of attention again. And so yes, it's true that everything tends to go up, but there are still ways to outperform. So for example, over here, this is the meme coin market, and in the last 7 days, AI16Z more than doubled. Yes, Bitcoin went up as well, but it definitely did not double. Now it's at a price of 43 cents. But the question is, how can we get into a token like AI16Z before it doubles? How can we find out about tokens like this early? And what I personally like to do is I like to follow other influencers. I like to follow insiders. I like to follow people that tend to move the markets, especially for those very small tokens. So have a look at this. Kyle Chessy bought AI16Z on the Jupiter exchange on Solana for 1.8 cents. And he didn't just buy once, he bought several times. Since then, the price went up by more than 2,000%. Now, who is Kyle Chessy? He's an influencer that tends to buy tokens very early, where of course not every single token makes these kinds of returns, but it's a bit like VC investing, right? You make 10 bets, you hope for 2 of those bets to make returns like this, and you're okay when the other 8 out of those 10 bets don't work out as well. So here we go, here is his channel. He's got 138,000 subscribers, and we track 12 of his wallets. So this is how wallet tracking works, right? You use on-chain analytics to find out who owns what wallet. And once you've got the wallet, you put this in a tracker. And then whenever this wallet makes a transaction, whenever this wallet buys or sells, we get an automatic notification. We are not just tracking Kyle Chessy, we also track Crypto Banter, for example. They've got 1.1 million subscribers. When they talk about a token, especially a small cap token, that token definitely goes up because there's a lot of attention on the token, right? Attention equals purchases, purchases equal a higher price. We've got 33 of Crypto Banter's wallets. And we're also tracking, for example, Alex Becker. He's got 1.5 million subscribers. We've got 12 of his wallets. And so really, I believe this is the way to beat the crypto market. It's to know more than most. It's not just to pick random tokens in a list, hope that they will make a 2-3x in this bull run. It's actually to be early. It's so early that most people don't know about this yet. I believe in this strategy so much that I made 8 dedicated tutorial videos just on wallet tracking. So how can we find influencer wallets? How can we track them? And how can can we then also interpret the signals that we get from the tracking? It's all part of the premium membership of this channel. The link is down below, thebitcoinstrader.com. Premium is not just about wallet tracking, it's also about backtesting, it's also about macro indicators, it's also about risk mitigation, portfolio diversification, etc. There's more than 100 tutorial videos in total in premium. And so yeah, people are very happy. Feel free to stop this video over here and read this feedback. The most important thing is, of course, once we have those kind of signals, that we also get some feedback from the rest of the community, right? That we discuss when should we buy, when should we sell, what are the current on-chain analytics. That's why I've got dedicated chats on the individual altcoins as well. So feel free to check it out. Feel free to invest some of the gains to make the portfolio grow even faster. There's also a 1-week money back guarantee. So in case you don't like premium, just message me within the first week and I will refund you 100%. You really have zero risk. And so does it make sense to buy the EIGEN token right now? It's one of the largest DeFi protocols. Price discovery though doesn't necessarily happen on chain. It happens with the market makers. Will the token do another 10x from here? Probably not, because it's again already very large. Is it going to outperform the rest of DeFi? Potentially, but again, the adoption curve has pretty much flattened out, right? We've seen this in the total value locked measured in Ethereum. So again, a quick reminder over here, EIGEN doesn't seem to be growing that much recently anymore. On top of that, we've got quite a bit of token inflation, but again, all of crypto is currently expanding, right? So when Bitcoin goes up, then of course the Eigenlayer price is likely going to go up as well. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video, or see you in premium. Cheers!